Picture waking up in 2025 to find your cash is worth 30% less than it was just a few years ago. This isn't a nightmare. It's a reality many people are facing right now due to inflation and rapid technological change. But here's the thing, while cash isn't exactly dead, it's definitely not the king it once was. Remember when everyone said to keep 6 months of expenses in cash? That advice hasn't aged well. With inflation eating away at your purchasing power and bank interest rates struggling to keep up, your safety net might be slowly shrinking without you even realizing it. So what's happening to cash? Digital payments are taking over everywhere. From street vendors to luxury stores, everyone's going digital. China's already there. In major cities, you'll get strange looks if you try to pay with paper money. The United States and Europe are following suit, just at a slower pace. But here's what really matters. Where should you put your money instead? Let's break down your best options for 2025 and beyond. First up, inflation-protected securities. These government-backed investments automatically adjust with inflation, protecting your purchasing power. Think of them as cash with a built-in shield against rising prices. Next, consider dividend-paying stocks from companies with strong track records. These aren't just paper assets. They're ownership stakes in businesses that generate real value and cash flow. Companies like Procter & Gamble have been paying dividends for over 130 years, through world wars, depressions, and pandemics. Real estate investment trusts, or REITs, offer another compelling alternative. They combine the stability of real estate with the liquidity of stocks. Plus, they're required by law to pay out most of their profits as dividends. It's like being a landlord without dealing with tenant calls at midnight. Don't overlook Series I savings bonds. These government-backed securities offer interest rates that adjust with inflation. When prices go up, your returns go up. They're not as exciting as cryptocurrency, but they're far more reliable for preserving wealth. Speaking of cryptocurrency, yes, it's worth considering, but carefully. Think of it as seasoning, not the main course. A small allocation to major cryptocurrencies could serve as a hedge against traditional currency devaluation. But remember, crypto is still the wild west of finance. Gold and precious metals deserve a spot in your portfolio too. They've preserved wealth for thousands of years and still work today. But don't go overboard. Aim for about 5 to 10% of your portfolio. It's insurance, not investment. What about stocks? Index funds tracking broad market indices remain one of the best ways to grow wealth over time. They give you ownership in hundreds or thousands of companies with a single purchase. The key is choosing low-cost funds and staying invested for the long term. Here's a practical strategy. Keep enough cash for 3 months of expenses, plus any major planned purchases in the next year. Put the rest to work in a mix of these alternatives. Think of it as building a financial fortress, different assets serving different purposes, all working together to protect and grow your wealth. Remember, the goal isn't to eliminate cash entirely, it's to be smart about how much you hold. In 2025, the real king isn't cash or any single asset, it's diversification. The world is changing fast, and your money needs to keep up. The future belongs to those who adapt, who understand that preserving wealth means staying one step ahead of inflation and technological change. Your future self will thank you for making these moves now, while you still have time to position yourself for what's coming. Because in the end, it's not about predicting the future, it's about being prepared for it.